Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, June 20th, 2025. It's 9:20 a.m. Eastern Time as I'm starting the video, so about 10 minutes before the opening bell. I'm going to take this afternoon off, so I'm going to just do this video and get one out to you today. Kind of follow up on the one I did yesterday, or the day before. Markets, of course, were closed yesterday for the Juneteenth holiday in the U.S. So on Wednesday, I did coverage of the equity markets and some other commodities, other things like that. And I told you I'd try to get to the trade ideas. So let's just focus there. I'm going to just start out, since I'm not going to cover it in detail, just the equity markets briefly. There's that kind of support shelf we've been trading on. So we did have those sell signals, the breakdowns on SPY, QQQ on their 60-minute uptrend lines, i.e. wedges there. And just need to take out, they've been dancing on this, on QQQ, the number's about 526.31. But again, I covered the equity markets in detail on Wednesday. So let's just dive into some individual trade ideas, because that's typically where the money's going to be made, especially when the market's going sideways. There are times where the market wakes up and has big moves, all these explosive moves. We've caught every one this year so far. Short on the way down there, covering shorts there, long on the way up off the bottom, and it's just kind of stalled out. Momentum has stalled lately. So let's get to where the some of the other opportunities are. So I'm on the trade setups page on right side of the chart. All the trade categories, when you click on the top menu of the site up here, they'll give you these the description under the cloud of symbols. Look, a lot of those need to be updated. I'll get to that when I get to it. Every so often I go in there and I'll purge out the old trades that have been completed, whether that's either stopped out or hit their final price target. So just if you have a question on one, or just read the notes. If it's already exceeded, if any suggested stop or any reasonable stop, it's done. And if it's already hit the final price target, it's done, unless I extend targets or stops, which sometimes I'll do on trades. All right, so again, I'm going in no particular order. I'm just going to go in the order of as they were most recently posted here under the setups category. So wheat is both a setup and an active trade. And again, I define what the trade setup is and what an active trade is, and they can be both. If you have an active trade that still has more meat on the bone, I'm not going to list it as a trade setup if we're within spitting distance of the final price target. At that point, it's an active trade, and then the final target hit, and then it's removed. But if it's early targets and there's plenty more to go, or it hasn't even hit the first target, then it will be. All right, so let's talk about wheat. Let's go there first. Just gave you an update the other day, so some of these, of course, are still fresh as far as updates go. The opening bell hasn't rang yet, so the pre-market trades are in white. This is a longer-term chart. I didn't queue it up for this video, but remember, again, if you're new to the site, just do this. If you're new to the site and you want updates or other charts I've referenced, underneath every post, either if you go to the screenshot, the little synopsis here, or you expand it, you're going to get these clickable links, and these are the categories, and these are the particular securities. So in this case, if I click on $wheat, or ZW, which are wheat futures, or WEAT, which is the ETN, all the same, it's going to load all the previous, in chronological order, all the updates to this. And if I'm in this category, which I am, it's just going to bring up the trades related to this current swing trade. And it's also a long-term trade. So I'm going to go back to where I was. That's how you can pull up the older posts. They're all kind of linked together. And what I was going with that is, remember, wheat is it's also a long-term trade in addition to a typical swing trade. That long-term trades, again, you can go into that category by up here. It'll explain what that is. When you go into long-term trades, you'll get the category description. Those are trades, the holding periods are going to be measured in months, even years. So it's call it an investment if you want, or a long-term trend trade, or a long-term swing trade. All right, so not much to update since the last one. I have longer term targets. Remember, wheat WAT is an ETN that's going to do its best to track wheat futures. Wheat futures are the pure play. So over time, when I use these commodity tracking ETNs that have some drift due to the expenses that they have to incur rolling futures continually, there are quite often I'll tweak the targets when we get there. So on this chart I've had for months now, just stating a solid break above T4 will likely open the door to those longer term swing targets, which again are usually measured in very high double digits to often triple digits on wheat when I capture trends on wheat. We've done many of those over the years. And so, this is the most recent divergent low. There's also been a lot of swing trades in the last year or so on wheat. We get up there, we hit these near-term swing targets. When you get to any or all, or sometimes when you get to one of them, I should say, you get some negative divergence, and that just sends us back, and it keeps this pattern going where it looks like wheat is, continues to bounce off and test that long-term trend line I was referring to on the weekly chart of $ WHEAT, which are the continuous contract futures. So we can chart back, for decades on that. Okay, not much more to add other than this is, how the trades work. You get to breakout, divergent low, breakout 1, backtest 1, breakout 2 of the secondary trend line backtest there. We set up in this trading range as predicted. Once we broke above that, we should rip up to T1. We hit it, and we're right there right now. We had some consolidation. If you see here, again, this guy's a little thin trading in pre-market, but there's a pullback. If you're an active trader, then what you want to do there is you game the pullback. You wait for a pullback to support. You recycle back in, and that's it. So I still maintain these other targets. Told you at this point in time, being that we just broke out of here, I think it'll be we'll probably see some continued upside. Pretty strong advance in wheat going forward, especially if we can punch above T1. That's the way it works. Each price target is a resistance level. Resistance is resistance until unless broken. And then once broken, especially once a price target's already been checked and we've had the reaction I was expecting, that usually increases the odds that if you punch through it, you're just going to go pretty quickly up to the next target or targets. So there's your update on wheat. What else do we have here? OSCR on the move today again. Probably it may hit that target today when I'm out, so I'm going to cover it right now for you. OSCR. This one, threw it out to you back. Where did we buy it? Oh, we bought it right off S1. I had two. I highlighted 2 entries. One here. Somebody asked for an update. Said no updates. Back to where we started right here. Showed you that chart, and that's it. So we already hit T1. I don't know what it was. I think 30% gain. And it's now clearly taken out T1, which increases the odds, opens the door for a move up to T2. And so at this point, if you get a pullback to backfill the gap or test T1, that would be an objective re-enter or add-on, although we've already punched through there. So you could just as well do that. And if it does, there's your final price target. If you want to hold it longer term, maybe some potential there, but that's the final target, and that's where I'll be booking full profits if one hit. Remember, have a stop limit order. Somebody brought this up the other day. Don't rely on updates from the site. I am a full-time trader. I'm in front of my desk most of the time, but there are times where whether things are slow or I have appointments, I'm out, or even sometimes I forget to set an alert. I have multiple accounts. I can't possibly manage them all, sitting there logging into different, brokerage accounts. I have different brokers, spread my bets, that way as well. And multiple accounts, personal, family, retirement accounts, different positions with different price entries and targets. So my point is, when you get a setup, assuming you agree with it and assuming this is the same target you're going to target, a couple things I always say, they bear repeating. These are the actual resistance levels where reactions are likely. That one's just shy of 23.97. So you want to set a price target, a sell good to cancel. Make sure it's good to cancel. Sell limit order a little bit below that. So let's say 23 on that one, 23.91. You can put the cursor there. It's all relative. There's no set formula, because if it's a $200 security, you're gonna, it could be 10 points plus. In this one, a little shy, just somewhere around the give or take within a few pennies above or below 23.90, 23.85, 24. The way it works is, the closer you try to squeeze out those last few pennies, the more you're risking the sellers are going to step in early and you might just miss that fill. That's it. So there's Oscar looking good. There's opening bell. We're up another 13%. That puts you at so far, if you took it, you're up about 60%. At the very minimum, stop should have been raised. I didn't move. I said the raise stops before. That stop should certainly be raised now. There's no reason to let it go back below entry and turning, much below entry and turning into a big losing trade. So move that stop up if you're still in this one. All right, next up, sugar cane, which is also ZB. I'm sorry. What is it for the futures traders? You can trade the SB, the futures contract, or CANE, the ETN that tracks those futures. And so far, just still same technical posture. This is where we took it the other day. The buy this is your support or buy zone, and so it is an objective entry down to, but not below the bottom of the zone. Wouldn't immediately stop out. I'd have stop set somewhat below there. And that's it. So no update really, because we took it that first day. It had a little pop. We're right back to where we started, and that's it. This is a bullish falling wedge pattern. There's your initial downtrend line. You have price resistance. A lot going on there. If it can pop that 1134, it's going to pop the wedge. It's going to run up there, and that's that. Did I give you your targets on the 60-minute? No, I just showed you there's the wedge on the 60. The targets are here. They're each mark level are potential price targets. So right there above. Still looking good. Just needs to pop that downtrend line to take off and run, and the price resistance right there. All right, what's next? Visa. I've got Amex down. I'm just going to loop them because they're sister trades. Visa, MasterCard, and AXP. Birds of a feather move together. So let's just start with Visa coming up now. T3, if you look in, we're close enough. We're going to just call that hit. You can take profits now if that's your target, or hold out T4. I have a high degree of confidence we'll come down here. It's going to be another callback to the 200 moving average. However, we're getting pretty near term oversold. Probably bounce first. Would be my guess. Depends on what the market does in the financials too. Any bounce back to this level. So what this is showing us, these are also in my watch list for tells on the economy. I have my own predictive indicators, if you will, in the market, and things like Visa, MasterCard, Amex, Federal Express, UPS. Obviously, things that if they're going down, ADP is another good one. The payroll companies, ADP and Paychex. If they're going down, that's a tell on the economy. So either way, I know some are chalking this up to the fact that Walmart and Amazon, I think, are going to talk and floated the idea of offering stable coins that may hurt their business. But I've been following all types of metrics on various Federal Reserve websites. Consumer is really in trouble, and this is just not being reflected in the market. We're seeing delinquencies go up on credit card debt, all kinds of stuff that show the consumer is getting squeezed. And ultimately, you're going to start, a lot of them are going to quit paying their credit cards. More have been. All right, so that's it. Nothing more to update there. Where do we short it? I'm trying to remember. Oh, yeah, on the breakdown here. So you're good for about 9% on Visa. MasterCard is now at the 200, so there's that call down to the 200s. And the primary trend line. We're just below the trend line, but we're on the 200s right now. So, again, another reason they'll probably come in and buy this up. And then when I look at that, I'll look at the 60-minute chart. So I can put a little support here as well. Why'd I do that? Not just because that's where we're at. We have a gap right there, some reactions there, reaction there, reaction high there. And so either way, longer term, look, just like the stock market, I have much deeper downside targets on these guys if you're willing to ride out the counter trend bounces. But just near term, it's a good time to one of two things too, guys. If you think but you're not sure, you want to hold out for more on things like this. Let me get to the next one here. Let's do AXP. You want to go to the longer term targets. AXP hasn't really bounced. It hit the 200s bounce right there and bounced off that almost at T1 level. Instead of booking profits, what you can do, like on a Visa, is lower your stops down pretty tight, or even very tight, and let it run just in case you don't get that bounce. Again, I'll probably get a little reflexive bounce here. It could last into a couple days, a week or two, but that's another option there. So you either take some full or partial profits or lower your stops. But at this point, no reason to let this trade turn into a loser. Initially, when you shorted here on that initial entry, stop should have been wherever I gave you, or just based on your a favorable risk reward ratio to your preferred target or targets. By that I mean some people take partial profits as each target's hit. Some will only target one target. Some will target the deepest. Some will target the earlier targets, and so your stop is going to be relative to that. However, at this point in time, there's absolutely no reason to turn a 9% profit into a losing trade. So, and plus the breakdown's already occurred. So if we take that level back, something else is going on. That's all you're going to get out of that. So, so lower stops. There's a big where to. I like to put my stops just like my price targets. They're tactically placed. A tactical placement would be, you don't want to see this bastard enter the gap. That would probably take it and backfill it. So maybe slightly above the gap at most. That would assure a very small profit. So that'd be my minimum stop right there. And or you can have a more aggressive stop in there somewhere. All right, let's go to the next one. Here's your credit cards. I already covered the indexes in detail on Wednesday. REMX still trade setup. Let's see what that is. I can't remember, did that one fire? Well, no, we didn't fire off Wednesday. We're there. We keep testing. So this is why it's a trade setup, not an active trade. You've got to clearly punch through and take out this downtrend line and that R1 resistance level. So still very much a setup. Very much these near-term targets with potential longer-term targets if this one breaks out and gets some traction. So there it is, the REMX. That's the rare earth ETF. Covered that. RIOT, RIOT, which is kind of a sister trade to crypto and Bitcoin and all that. RIOT, it's a proxy play on trading Bitcoin. We had this divergent low recently, and that's where RIOT was thrown out as an official trade idea when I got covering all the Bitcoin shorts that we had. Bitcoin and Ethereum went long and bullish the cryptos off the lows there, along with RIOT. We hit our first, second, and then that potential third target, and told you that that one looked like it had run full circle or come full circle and broke down. And the fate of that is going to be intertwined again with Bitcoin, which needs to break out of this range. This is just a 60-minute chart of IBIT, the big Bitcoin ETF. So it's been in this, we broke down, we put in a divergent high, we had a sell signal there on a break of that rising wedge, but we've been moving sideways. And Bitcoin's had, it's a crowd favorite, but all I can tell you, it's not going to go down unless it can take out this trading range. If it does, it's going to increase the odds we're going to go down to any or all of these targets. And if it breaks up, it's going to put in a marginal new and still divergent high, just like the stock market. This has mostly been in recent years a risk on asset, mostly, meaning it goes up and down with the stock market. So keep that in mind. If you're long Bitcoin and long the stock market, or short Bitcoin, short the stock market, you have a non-diversified trade with a high correlation. So I'm just going to draw that line right now and tell you it'll be no different from the stock market. If the stock market wants to punch through, make a marginal new high, my outlook won't change. It'll be the same here, that's all it's going to most likely be, and it will most likely be a new high that fails. So there's your update on, and that goes along with RIOT or any of the crypto proxies if you're trading those. What else do we have? We have Broadcom, NVDA, VERV. VERV is closed out. We hit our final target on VERV, but I'm going to talk on that because I see this is where I haven't categorized. I did the last update I gave you, mark that as a completed trade. I just got to go back to those previous posts. But let me start with Broadcom first. We'll go in order here. AVGO, kind of going nowhere lately. It's still well below the suggested stop. These are your targets, pretty aggressive targets that I have. that I have a pretty good degree of confidence they'll be hit. However, it's just like the stock market. It may want to punch out a marginal new high. If it does, it's going to make a run very close to. I'll address it at the time if we get close to that level. So you can see here, we've been diverging. Big, massive divergence on the long-term charts, daily, weekly. However, we had the reasons for shorting this one were already made, and it's gone nowhere. It's right back to about, I forget exactly, I think we shorted on a break of this uptrend line here. So really no update there, guys. The technical posture is the same. There's no reason talking about it any more than that. NVDA, same thing. NVIDIA also doing the same thing, going nowhere lately. It's not going up, but it's not going down. We shorted it here on the top of the deep seat gap, just like we shorted it right here. That was a monster, perfect entry and a perfect cover. As stated at the time, all shorts should be covered the morning of August 6th. April 6th, I'm sorry. I think it was April 6th, 7th, whatever that bottom, including, of course, NVIDIA was a short. And it also hit a long-term target on the weekly chart. And that's it. So we come full circle. We wedged up. We've been wedging. We broke the trend line, and we're just trading right on that deep seat gap. So no change because it's gone nowhere for the last few weeks. And again, your targets, especially if you're going on the long-term chart, my final target's still right here, T4. These are all just potential targets, but T4 is still the final target. And so that's still calling for, nothing's changed, a drop of about 72% in NVIDIA. So therefore, just kind of give you an idea, you could have a 14% stop loss. You'd still have a very favorable RR. All right, next up. VERV. All right, so VERV again hit final target. Nice trade there. Daily chart. Then pre-market we hit the 1275 target. And I made a point here. Let me go to VERV here. Let's cover VERV. Final fifth price target hit for 190% profit. Guys, any of you that are new to the financial markets, this is why I posted this down here. This is very important. Lilly acquired them at a price of $10.50 per share. So that's, and the stock went above it because you have and this is again, somebody capitalized on this the other day on the site. They told me that strategy I just recently shared. I've shared it many times over the years, but my preference to use OCO orders, one cancels the other. I have one order at my price target. And that one is always filled to be allowed to be filled outside of the regular trading hours. Again, I did a video explaining this in detail because my goal in any trade is to hit my price target but not be stopped out. So my stop loss order, which is down here, that one does not get set to be filled in the outside the regular trading session, because very often these bunch of fools that jumped on this thing that morning that read the news, and these are the Reddit armchair traders that took the Biden checks, when the stimulus checks when COVID hit, and they started trading. They read that and they just start buying it, and they're not probably seeing that number but not paying attention that's they get that extra $3 potentially if they hit benchmarks that are going to take years probably to come out. So so what happens anytime there's a buyout on a company, it's going to go up to and hover around the buyout price until the buyout's finalized, unless there is either a lot of news out there that the deal may not go through or is likely to fall through, and then it's going to price at a discount to that, or it's going to price at a premium if another bidder comes into the fray here, or there's a lot of talks about a potential bidding war. Otherwise, you can expect the stock to kind of just go, until the deal closes, hover around that range with a little bit of a premium, because they do have this additional, if these milestones are hit, to get up to 1350. So I just wanted to point that out. And so that's why, other than the early session, this is kind of where that's the premium that's now being the arbitrators, the ARB funds, arbitrage funds. I'm sorry, not arbitrators. Arbitrage funds are they're figuring out, okay, what's the likelihood of that, and so it's probably just going to hover in this range unless some other kind of news event pops on it. But that's it. So, anyways, it's probably just gonna. And let me think. There's another one. Who was it? Sage. I think the other day I heard buyout acquisition as well. You can see the same thing. So that's what these guys do, and they'll just trade wherever the roughly in a range where that buyout price is, and based on probabilities of it happening or not happening, all that will then affect the any premium or discount where it might trade before the deal goes through. And Sage, Sage had a nice looking chart too. I just read about this. I didn't share this one with you guys. I just read about it. We've traded this one on the site before in the past. I think we used to divergent low back here, marked up back on, created that back in 2020. Nice run on that one. And on that, if you want to see something like that, an old trade or whatever, you just go here again, resources. A lot of good stuff here. I use these tools of the trade things all the time, the earnings calendar, economic calendar, and then you can pull up like Sage, for example. So I remember, Sage back in, we've had several trades on it. Last one, like I said, back in beginning of late December, January 3rd, 2020 was the last update on it, and you can see, so what's covered in this video. As again, you can see all the symbol tags down below that are covered. There's Sage right there, and you play the video. And
hi, this is Randy Finney with Right Side of the Chart.
And this video actually has the markers down here. I think YouTube did that. They put it there. There it is, Sage right there. And you go here, and I talked about in the video right there. You can captions coming on. You can see we went up. We took it right there. I was talking about taking it. We took it at the lows. I bought on that, put out as a trade idea right there, and then we hit, as it tells you right here, we took profits on it and made somewhere in there. I think it was 30%. No, I'm sorry. It's going to say a good balance of about a 30%. This is transcribing. Yeah, it was from whatever that was, 60 up to 76, about a 37% profit. And again, that was the last trade, just trying to give you an idea of how to find these trades here. So let's go back to where we were. That was trade ideas, swing trades, setups. And I think that's it. I don't know how far back I should go right now. We're about 30 minutes into this video. We were on page 2. I already covered all these. And again, I was pulling Sage up just to kind of give you an idea when a company gets acquired. You know that you can sit in there for a while, and unless something else comes up, like I said, unless the deal falls through or somebody comes in and says, well, we want to offer a higher price before the deal's approved and agreed upon. That's always the thing. These are the NTRN, and some of these other ones are the ag input stocks. I still like that sector. We've had quite a few of our higher price targets hit. Some of the, this is NTR, T4 hits. T1 was back here, so we probably would have took this one initially back here out of that wedge breakout or down below the break, before the breakout. And so we're getting there. We've taken out T4 now. I've been updating these. That was the last update when T4 was hit. So again, you'd have to look back. You can click the symbol tag and see. And there's been multiple, like all trades here, these longer term swing and trend trades, you have multiple entries, re-entries on pullbacks to support. So there's often not any one entry price or one exit price. But so far, good for about a 30-something% gain. And these are the other ones in that sector that, when I started getting bullish last year on the ag input stocks, CTVA was back here. That one's already run up about 70%. Walking up this trend line. NTR I just covered. CF right there. Coming up on T2. We've already hit T1. Mosaic coming up on, we just recently hit T3, and I told you at the time, I said you could take, expected, we were overbought. I looked for a pullback, expected it, took some profits there, and told you if on a break of this trend line, if you don't want to take profits, if you wanted to ride out and try to shoot for a straight move up to T4, we're getting very overbought, as I highlighted then, that you could set a tight stop under this trend line. If you did that, then it would have taken you out with minimal give back, profit give back, and you would have recycled back in on this pullback to T2. That's how these targets work. You know, the resistance on the way up, resistance once broken becomes support. So that should be it. When we get up to T4, we'll probably have, as I'm drawing out here, negative divergence. And so this was a target given to you back in, last year. And if hit, it's going to be, again, I forget exactly where this one, I know I started getting bullish on these in 2024, but that's going to be about a 72% run or something there. ICL already hit the final target, and that's it. So if you want to, if you're longer term bullish, I can make a long term case when I go to the weekly charts. But final targets are just that. So we hit the final target there, and we're still on it. You've had multiple opportunities. If that was the first target, I'm sure we would have taken it somewhere in here. I don't know. That was good for about also 60-something% gain. FMC, this one had longer term targets, dropped out. This is why, and I often talk about it as I would have in these videos, when I engage certain sectors. For example, the gold mining stocks might be an example. You either play a sector ETF if you have one, like GDX, or you can do the individual names. But when I do that, we were doing this with the pot stocks. I take what I call a shotgun approach. That's what I told you multiple times on these. Whereas I take not just one, I don't pick my favorite, because one of them may be the one that craps out. I also, as I went through these in multiple videos, I talked about how I sort my list by market cap. And as you go down the line here, the market cap gets a whole lot smaller from a $50 billion company down to a $4.3 million company that covered. Extreme, much higher risk on these lower price ones. And so therefore you should use smaller position sizes on those if you even decide to take those. And the shotgun approach, you do that and you have a half dozen or a dozen stocks in a sector. One or two are going to do this. That was a big earnings gap. And this one's down and probably would have exceeded anybody's stop, but it still looks constructive now after putting in that divergent low. SMG, Scott's Miracle Group, I told you was not one of my favorites at the time. I'm just hitting the ones in the sector. UAN, the ones that I had price targets were the ones that were my favorite. IPI, that was one I gave you back here. For target was just hit, but we still have two more targets on that one that haven't been hit yet. Looks like, look at that. And again, these targets, these lines, these targets are made up, back in October of 2024. And if you think that's mere coincidence, this is technical analysis. This is where my skill sets lie, identifying key levels that are likely to come into play. We hit the top of T4 zone. Look how many times this stock has been stopped cold. Almost exactly at the top of the line that I predicted not over a year ago, about 7 months ago, 8 months ago. And now the takeaway is, if I thought way back here at this point in time that was a significant resistance level, then the fact that we've hit it so many times only further validates that's a significant, important technical resistance level. Therefore, and this is how technical analysis and swing trading works. Now, if they pop it, you most likely are going to bring in the buyers. And all those that have stop loss orders above that level, short sellers, they're going to get squeezed out, and it should be the catalyst to move up to T5 and then ultimately T6. All right. So, and then these little ones, like I said, they're lower price, low price, higher risk. So, but some of them are starting to shape up, and that's usually what happens. Just like the stock market, after a bear market or big correction, everybody buys. They jump into Apple and Amazon and Meta. They buy the names that they've been wanting to and were never, just couldn't pull the trigger on when prices were so high. You get the dip buyers. So the big names typically go up first. Same thing with the gold mining stocks. The senior miners usually go first, then the junior miners. Same thing in a stock market rally. Towards the end of a bull market, speculation and risk taking is rampant, and you see the shit stocks go up. What I call a dash or trash. And you'll see that in these kind of sectors too, that after the big names have been going up for a while, people then start to come in and start to buy the lower price names that are more aggressive, higher risk. So those are the ones you might want to look at. It's just a game of musical chairs. How much more time is left for this sector to rally. As long as it is, a lot of these smaller names will probably start to play a game of catch up. So maybe a takeaway there, guys. Those that I just showed you have hit the final targets. If you took full profits, you could deploy some of that capital into these guys. All right, that's about it. I can go back and we can sit here and talk forever. If there's any particular trade idea that you want an update on, it doesn't have to be one that I've shared. Anything you're watching on your own, let me know. Oh, silver and gold, I should have updated that. Silver here. Let me give you an update. You have this recent divergent high I showed you right there. There is a downtrend line and support. So if it hits support, bounce. Bottom line, if it breaks that support, which I ultimately favor, it's going to come at minimum down to this trend line, and possibly if it breaks that trend line, it's going to go down more. These are all potential targets. I think likely targets too, especially if the dollar goes up. If it pops this little near-term downtrend line, probably going to give you a little rally and then turn around. So either way, I favor these targets, but your next objective sell signal or short entry is going to come on a break of this 35.54-ish level right there. And if it pops this little near-term downtrend line right here, this is a 6-month, 2-hour candlestick chart, and I'd probably drop down to a 30-hourly chart to see where we go. This is that line I just gave you right here. So this is what needs to go to open the door for the next leg down. Here's that little minor uptrend line. Let me draw it in here. Oh, nope, I grabbed and pulled the wrong line there. Something like that. Yeah, it's hard to predict how high, but I can tell you we already put in a divergent high. What I think will happen, again, it's all going to depend a lot, or mostly depend on what the dollar and gold does. The breakout will probably fail, and you could maybe take a short up there with a stop. It's not too much above it, and then add if and when 35.50 goes. All right, let me wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.